Good morning, ma'am. Good morning, classmate. I am Ashley Jane D. Alferez. This is the continue of Baguio's report. Number 8. Centralization. It is a setup which decision-making powers that concentrated a few leaders of the top organization structure. According to Fayol, he defined this as lowering the importance of the subordinate role. The degree of centralization and decentralization a firm should adopt depends on the specific organization. The difference of centralization and decentralization is increase the important and the centralization is decision-making process. Number 9. Scalar chain. This chain is of all the top management to the person working in the lowest rank. The existence of a scalar chain is essential. It is necessary to adhere it. For example, employees should know their position in an organization. And second, the first line supervisor has the least authority. And third, manager is the certain amount of authority. And the highest authority is the president. Number 10, order. It is like a process of taking purchase requests from a customer and organizing, tracking, and fulfilling them. For example, the workplace should clean and safer for all employees. And the people that related to their work should be treated as equally as possible. Number 11. Equity. A process of creating and managing owners in a company. For example, managers must always be fair to staff. They are expected to maintain discipline when needed and act with kindness when it seems right. Stability of tenure of personnel, which states that an employee should be placed at the position for a minimum fixed tenure so that he or she can contribute to attainment of goals. For example, retaining productive employees should be a high priority of management. Number 13, initiative. A personal quality that shows a willingness to get things done and take responsibly. For example, management should be encourage worker initiative. And lastly, number 14, spirit de corps. The common spirit existing in the members of a group and inspiring enthusiasm, devotion, and strong regard for the honors of the group. For example, organizations should always attempt to promote team spirit and unity. The 6 primary major functions of management: forecasting, planning, organizing, commanding, coordinating, and controlling. Forecasting involves the generation of a set of numbers or scenario that correspond to a future occurrence. And it involves examining the future and then making a plan of action. For example, the evening news gives the weather forecast, not the weather prediction. Regardless, the terms forecast and prediction are often used interchangeably. Planning. Planning should be coordinated on a different levels, and for our purposes, can be thought of as determining all the small tasks that must be carried out in order to accomplish a goal. Let's say your goal is to buy a gallon of milk. Throughout your day, you are executing plans that your brain comes up with to achieve your daily goals. And planning is about making plans of action. This function is the most crucial of the management, and it requires active participation of the entire organization. Organizing. This function is providing capital, personnel, and raw materials for running the business, and it needs to build a structure to match the work. For example, preparation of accounts, making sales, record keeping, quality control, inventory control, and etc. All these activities have to be grouped and classified into units. Commanding are a type of sentence in which someone is being told to do something. There are three other sentence types of commanding: questions, exclamations, and statements. And commanding is about optimizing return from all employees. And commanding clear knowledge of personnel helps create unity and loyalty of the employee. Coordinating. The definition of coordinating is being able to move and use your body effectively and multiple people or things working well together. An example of coordination is when two people work together to plan or coordinate a party. And coordinating is a function means to unify and harmonize activity and efforts. And coordinating, it helps maintain the balance between the activities of the organization, as in sales to production and procurement to production. Lastly is controlling. Control in a business setting or organizational control involves the process and procedures that regulate, guide, and protect an organization. For example, controls limit check writing authority and the use of company credit cards.
Good morning everyone, I'm Jeline M. Banat, and for today I will be reporting the topic business in general. So business is an organization where people work together. Business is an occupation or trade and the purchase and sale of products or services to make a profit. Businesses can be privately owned, not-for-profit, or state-owned, which I will discuss later on. So, an example of business is farming, house sales, and etc. Business has a primary goal, and that is to maximize profits for its owners or stakeholders while maintaining corporate social responsibilities. So, goods are things that are made to be sold. Goods are tangible items that can be used and stored. Businesses make goods and sell them to customers who then own them. So, an example of goods in business includes computers, foods, automobiles, appliances, and clothing. Goods can be anything from the merchandise, supplies, raw materials to already completed products. All of the items that are movable are sold to a particular buyer. Goods are usually categorized into any of the following categories. So number one is durable goods. This refers to ones that last a relatively long time and that are not depleted when used generally, such as machinery and tools. The second one is consumer goods, are items purchased primarily for buyers' personal, family, or household use. Hard goods are consumers' durable goods such as appliances. And the last category is soft goods, or consumers' goods that are not durable and can break, such as clothing. So the next one is services. Business services is generally a term that describes a work that supports a business but does not produce a tangible commodity. A good business service aligns IT assets with the needs of company's employees and customers and supports business goals, facilitating the company's ability to be profitable. So there are a lot of examples of service business, such as information, technology, education, consulting, transportation, events, etc. Number 3 is investment. So what is investment in business? An investment is an asset or item acquired the goal of generating income or appreciation. Appreciation refers to an increase in value of an asset over time. When an individual purchases a good as an investment, the intent is not to consume the goods, but rather to use it in the future to create wealth. An investment always concerns the outlay of some capital today, time, effort, money, or an asset in hopes of a greater payoff in the future than what was originally put in. For example, an investor may purchase a monetary asset now with the idea that the asset will provide income in the future or will later be sold at a higher price for a profit. So the next one is output. So what is output? Output is a quantity of goods or services produced in a specific time period. For a business producing one good, output could be simply be the number of units of that goods produced in each time period, such as month or a year. So the fifth one is privately. A privately owned company is a company that is not publicly traded. This means that the company either does not have a share structure through which it raises capital, or that shares of a company are being held and traded without using an exchange. Privately owned companies include family-owned business, sole proprietorship, and the vast majority of small and medium-sized companies. The share of privately owned companies are more challenging to sell due to the uncertain nature of their real value and the lack of an exchange that supports transparency and liquidity. So how a private-owned company works. A private company, however, don't make a money via stock exchange. Instead, a private company raises capital through private investors like venture capitalists and investors. These investors may receive shares of the company equity. So that's how privately owned company works. So the next one, we have profit money. Profit describes the financial benefit realized when revenue generated from business activities exceed the expenses, costs, and tax involved in sustaining an activity in question. So any profit earns funnel back to business owners who choose to either pocket the cash or reinvest it back to the business. A profit money you make as opposed to money you lose. Businesses needs to make a profit money, or they will have to fire employees, cut expenses, and maybe go out a business entirely. If more money is coming than going out, that's a profit. So profit also means a benefit. So the next one is not for profit. So what does not for profit means? Not for profit organizations are type of organizations that do not earn profit for its owners. Yes, all of the money earned by or donated to a not-for-profit organization is used in pursuing organization's objectives and keeping it running. An example of such organizations include UNICEF and American Red Cross. On the other hand, not-for-profit organizations focuses on small groups of activities within the society or economy, and they focus on the areas such as religion, education, science, or even public safety. And the last one is state-owned. State-owned enterprises are independent bodies, particularly wholly owned by government. They perform specific functions and operations in accordance with the particular act. So what are the benefits of state-owned enterprises? So there are COAs receive financial supports of government. CEOs are known for receiving access to favorable policies such as tax breaks on certain products, lower interest rates on loans from state-owned banks. access to large and stable potential customers base. So I think that's it. Thank you for listening. Now it's time to hear the presentation of my other members.
Good day everyone, my name is Karen Camento Baclaan. I am going to tackle my part in Lesson 1 titled Concept of Business and Development and Concept of Business and Development Culture by Abraham W. Maslow, Hierarchy Needs. And the last part is why people engage in business. And let's start with concept of business and development. Concept of business and development. There are three legal forms of business ownership. But first, what is business ownership? A business ownership refers to the control over an enterprises, providing the power to dictate the operation and function. So the first of the legal forms of business ownership is one, corporation created by the operation of law. It means it's an artificial being created by the operation of law, having the right of succession and the powers of attributes and properties expressly authorized by the law are incident to its existence, and the act of this is 1459. The second is sole proprietorship. It should be registered in the name only one person. A sole proprietorship is the simplest and most common structure chosen to start a business. It is an unincorporated business owned and run by one individual with no distinction between the business and the owner. You are entitled to all profits and responsible for all your business, debts, losses, and liability. There are advantages of sole proprietorship. The first one is easy and expensive to form. A sole proprietorship is simplest and easiest expensive business structure to establish. The second is complete and control. Because you are the sole owner of the business, you are complete control over all decisions. The third advantage is simplified the tax preparation. Your business is not taxed separately, so it's easy to fulfill the tax reporting requirements. The example of this is of sole proprietors is include as small businesses such as local grocery store, a local clothes, or you have only to handle a business. The third is partnership owned by two or more person. Agreement is required only to be in writing. The, the key factor are two or more people who are carrying on as co-workers and sharing profits. Although each partnership agreement differs based on business objectives, certain terms should be detailed and documented, including percentage of ownership, division of profits and loss, length of partnership, decision making and resolving disputes, partner authority, and withdrawal or death of a partner. Like for example of this is Knight and Apple. They have been working since the early 2000s. The second slide is tackled about concept of business and development culture by Abraham W. Marshall, Hierarchy Needs. The fifth is self-fulfillment, goal, and vision. When we follow the path of fulfillment, we create more meaningful moments. we become more or what we're capable of. And our work lives and our personal lives hang together better. And the best of all, we need to achieve a peaceful calm. And having a vision, it provides a sense of purpose and direction for the business. And it defines your short or long-term goals and guide the decision you make along the way. A leader has a vision and conviction that a dream can be achieved. He inspired the power and the energy to get it done. The sixth is ego or self-esteem, self-recognition, or group satisfaction. Esteem needs refers the needs for respect, self-esteem, and self-confidence. Esteem needs are the basis for the human desire, and we have all to be accepted and valued by the others. If you are not capable to accomplish your self-esteem needs, it can cause issues regarding self-esteem and self-inferiority. Um, Marshall theory of motivation, it is satisfies their unmet needs. The first is physiological needs. There are the basic needs of human life. The second is meeting these needs requires more money, and hence the entrepreneur is promoted to work more in his enterprise. And to us, this is importance of our culture to your company because they're more like to feel more comfortable, supported, and value especially to our beliefs and behavior. And the last slide, why people engage in business. People engage in business for the several reasons, but the most compelling reason for many is to earn substantial income. And when individuals set up their own businesses, they are able to set their own hours and policy, establish prices, and make all important decisions on how they operate the company. But definitely, as for me, as a person is or as a student, to earn profit, income, and provide to my family to stable financial, and especially for this time pandemic, and lastly to our future or my future. Thank you.
Relationship between business and the economy. Economy and business. Business GDP. A country's economic ability to produce goods and services. The GDP is an indicator of how a country's economy is doing. This means a business can use it to predict whether their industry will grow or if it will falter. Gross domestic product. It represents the value of a country's national income in one year. An increase in real GDP indicates that a country's standard of living is increasing. Therefore, it's used to measure a country's economic growth. A country with the high GDP are likely to have high incomes and high standards of living. And if GDP goes up a lot, people are likely to be earning and spending more, and businesses are likely to be hiring and investing more. So, what is really the relationship between business and the economy? So, every business is also a part of the economy. Businesses decide what products to produce, how to price them, how many people to employ, how much to pay these employees, how much to expand the firm, and so on based on their economic expectations. Business provides goods and services that generate economic output. Companies can step in and begin producing products if an economy is unable to produce high demand goods to satisfy the public. Industry. So, what is industry? Group of business firms offering similar goods and services. An industry is a group of manufacturers or businesses that produce a particular kinds of goods, services, or source of income. There are two general types of industry: extractive industry and manufacturing industry. So, what is extractive industry? An extractive industry is concerned with the production or processing of goods and materials as well as breeding and raising animals. An example of extractive industry are like farming, mining, hunting and fishing operations, and many more. What is manufacturing industries? Are those that engage in transformation of goods, materials, or substances into new products. Manufacturers often have plants, mills, or factories that produce goods for public consumption. Machines and equipment are typically used in the process of manufacturing. An example of manufacturing industries are like Nokia, Honda, Shell, Pure Foods, and etc. And there are kinds of business. First one is commerce, an interchange of goods or commodities, especially on a large scale between countries, foreign commerce, or between different parts of the same country, domestic commerce, trade, business. So, commerce is activity of buying and selling, particularly on a large scale. It involves the exchange of goods and the services between businesses or similar entity and takes place in both domestic and global business. Commerce can provide jobs, enhance a region's productivity, or improve the health and well-being of citizens. It is a subset that focuses on the distribution aspect of business as opposed to the production side. The buying and selling of a single item is known as transaction, whereas all the transaction of the item in an economy are known as commerce. Nearly every business transaction is a form of commerce, like purchasing food at a restaurant, buying stock on the stock market, selling goods in a store, and many more. The financial industry often breaks down commerce into more specific categories. Example, Shoemart, Robinson, Rustans, national bookstores, and etc. So, services are efforts rendered for free in the satisfaction of the needs and wants of the consumers. For example, is beauty salon, law and accounting firms, and etc. So, service business are those that provide an activity of the performance of a task with a commercial purpose. This task is directed to help a business or an individual in a subject such as consulting, accounting, transportation, cleaning, hospitality, traveling, or maintenance. There are elements of business system. The first one is labor, manpower, land, materials, capital, money, entrepreneur, management skills. The factors of production are resources that are the building blocks of the economy. They are what people use to produce goods and services. Economists divided the factors of production into four categories, and these are labor, land, capital, and entrepreneurship. So the first factor of production is labor. Labor is the effort that people contribute to the production of goods and services. Labor resources include the work done by the waiter who brings your food at a local restaurant, as well as the engineer who designed the bus that transport you to school. It includes an artist's creation of a painting as well as the work of the pilot flying the airplane overhead. If you have ever been paid for a job, you have contributed labor resources to the production of goods or services. The income earned by labor resources is called wage, and it is the largest source of income for most people. The second factor of production is land, but this includes any natural resources used to produce goods and services. This includes not just land but anything that comes from the land. Some common land or natural resources are water, oil, copper, natural gas, coal, and forest. Land resources are the raw materials in the production process. These resources can be renewable, such as forests, or non renewable, such as oil or natural gas. The income that resource owners earn in return for land resources is called rent. The third factor of production is capital. Think of capital as the machinery, tools, and building humans to produce goods and services. Some common examples of capital include hammers, forklifts, conveyor belts, computers, and delivery vans. Capitals differs based on the worker and type of work being done. For example, a doctor may use a stethoscope and an examination room to provide medical services. Another example, our teacher may use textbooks, desks, and a whiteboard to produce education services. The income earned by owners of capital resources is interest. The fourth factor of production is entrepreneurship. An entrepreneur is a person who combines the other factors of production, labor, land, and capital to earn a profit. The most successful entrepreneurs are innovators who find new ways to produce goods and services or who develop new goods and services to bring to the market. Without the entrepreneur combining labor, land, and capital in new ways, many of the innovation we see around us would not exist. Entrepreneurs are vital engine of economic growth, helping to build some of the largest firms in the world as well as some of the small businesses in your neighborhood. Entrepreneurs thrive in economies where they have the freedom to start businesses and buy resources freely. The payment to entrepreneurship is profit. Remember, goods and services are scarce. In case you have forgotten, scarcity is described as limited quantities of resources to meet unlimited ones. Consider a pair of denim blue jeans. The denim is made of cotton grown on the land. The land and water used to grow a variety of different crops. The workers who cut and sewed the denim in the factory are limited labor resources who could have been producing other goods and services in the economy. The machines and the factory used to produce the jeans are limited capital resources that could have been used to produce other goods. The scarcity of resources means that producing some goods and services leaves other goods and services unproduced. So it's time to wrap things up, but before I end this discussion, always remember that the four factors of production are labor, land, capital, and entrepreneurship are scarce resources that form the building blocks of the economy. That's all. Thank you.